Welcome back to the deep dive. Today we're focusing on a really interesting company operating right where governments meet citizens, BLS International Services Limited.
That's right. If you've traveled internationally, chances are you've probably encountered their services somewhere along the line.
Exactly. They're one of the top global players for visa, passport, consular, citizen services, working with, over 46 governments in 70-plus countries?
Yeah, massive footprint.
So our mission today is to really dig into their latest performance, the Q2 and half year FY26 report, and kind of pit those results against what the market's saying, looking at the technicals.
There seems to be a bit of a disconnect there, right?
Yeah.
Strong numbers, but the stock chart tells maybe a different story.
Precisely. Why is this company, which looks like a financial powerhouse, winning huge deals, struggling to, get the market excited? Let's unpack this.
Okay.
Let's start with the basics. The numbers for the quarter ending September 30, 2025. Consolidated revenue jumped significantly.
Yeah, up 48.8% year over year. That's RS 736.6 crores. Pretty substantial.
And operating EBITDA.
Also strong growth. Up nearly 30%, 29.7% to be exact, hitting AIR's 212.8 crores.
Okay, those are definitely aggressive growth figures. What strikes you about how they got there? Was it just, more people traveling?
Well, that's part of it, the organic piece. Post-pandemic travel recovery certainly helps. But a big chunk of this jump comes from integrating their recent acquisitions.
Ah, right. Like Citizenship Invest and Fidelis Solutions, they're consolidating those now.
Exactly. So it's a mix of organic lift and bringing that new inorganic growth fully onto the books.
Makes sense.
But, what's maybe more impressive is the profitability story here. Despite that rapid growth, which can sometimes squeeze margins.
Yeah, integration costs money.
Right, but they actually stabilized their margins in Q2. EBITDA margin held at 28.9%, and the Batman margin was 25.2%. Very healthy numbers.
So they're not just growing, they're growing profitably. They aren't sacrificing returns just to get bigger.
That seems to be the case. They're scaling and maintaining those strong margins.
And speaking of scaling up, we absolutely have to talk about the contract wins this quarter. Huge ones.
Yeah, that UIDI contract is massive.
Tell us about that. 6 years with the unique identification authority of India to run district-level Aadhaar Seva Kendras.
Right. And the value. Aadhaar's 2,055.35 crores. That's a monster deal.
Just to give listeners some context, Aadhaar Seva Kendras, these are the centers handling enrollment, updates, verification for India's national digital ID. This isn't just processing a few visa forms.
No, this is core digital infrastructure for well over 1 billion people. It's foundational.
So that win locks in significant revenue for 6 years. That's huge visibility.
Absolutely. And then you pair that with the other big international win.
The one for Indian visa application centers across China.
Yep, a 3-year deal from the Ministry of External Affairs. So, again, strategic, long-term government contracts adding to the backlog.
Okay, now here's maybe the most compelling figure from the whole report, at least for me.
The cash balance.
Exactly. The sources point out that even though they spent around Rs 1,000 crores on acquisitions in FY25,
Which is a lot of spending.
right, their net cash balance actually grew. As of September 30th, 2025, they were sitting on Rs 1,306 crores in net cash. That's way up from Rs 928 crores just 6 months earlier in March. How does a company grow so fast, spend so much on buying other companies, and still pile up more cash?
Well, that gets to the kind of structural genius of their business model. It's that negative working capital point.
Explain that.
Basically, their entire revenue model is built on getting paid up front. The applicant, the person applying for the visa or service, pays the fee before BLS even fully delivers the service.
Okay, so they collect the cash immediately.
Immediately. They have virtually zero receivables, zero waiting for the government client to pay them. Every application process means cash in the bank right away.
So it creates this self-funding growth engine.
Precisely. They're effectively being paid to scale up their operations. That efficiency is what drives that massive cash reserve, even while they're investing heavily.
That really reframes the whole picture. It's not just growth. It's incredibly efficient cash-generating growth. Okay, let's shift gears slightly to their strategic decisions in Q2. This is where it gets maybe a little confusing.
You mean the operational shifts versus other moves?
Yeah. Operationally, they're clearly focused on maximizing margins. The sources talk about this big shift away from a partner-run model for visas.
Towards the self-managed model, right.
And the impact was huge, wasn't it? EBITDA margins went from what, 8.3% in FY21 all the way up to 28.7% in FY25.
Yeah, it's a massive jump.
Yeah.
That's not just tweaking things. That's a fundamental overhaul of how they make money on visas.
And incredibly hard to pull off, I imagine.
Oh, absolutely. Moving from relying on local partners scattered everywhere to building and running your own standardized centers across 70 countries, that takes serious coordination, tech integration.
It shows a real commitment to controlling the process and grabbing more profit from each transaction.
Definitely.
But then we hit this, well, it seems like a contradiction. Alongside this super focused, high margin government services strategy, they bought a hotel.
Yeah. The Trefedian Hotel in Aberdogie, UK, for RSS 78.3 crores.
100% acquisition. Wait a minute. If your core strategy is driving margins from 8% to nearly 29% by focusing on process control and government services, why divert, nearly 80 crores into a UK hotel? Where's the synergy?
That's the million-dollar question, isn't it? Or, well, the 78 crore rupee question.
Right.
The sources frame it as a strategic entry into the hospitality sector, which sounds okay.
Sounds vague.
It does. On the surface, it looks like simple diversification. Maybe buying a stable physical asset in a foreign currency, a hedge perhaps, or just parking some of that massive cash pile. There's no explicit synergy mentioned in the filings that connects it back to visas or e-governance. You could speculate, maybe, about integrating premium travel services for their high-net-worth clients from the citizenship invest side. But that's just speculation.
Pure speculation. For now, it definitely stands out as the most unexpected move in Q2.
Agreed. Very much an outlier.
It certainly, creates a bit of cognitive dissonance. Okay, moving away from the hotel surprise, let's look at the established business structure. The diversification into digital services is core, right?
Oh, absolutely. Visa and Consular is still the lion's share, about 75% of the revenue mix in FY25. But that other 25% is digital, and that's growing.
And that includes things like the e-governance work, like the Aadhaar centers we mentioned.
Right, and also assisted e-services, and importantly, their role as a business correspondent.
Explain that business correspondent piece. That's basically acting like a mini bank branch in remote areas.
Essentially, yeah. They act as agents for banks, providing basic financial services, deposits, withdrawals, account opening, especially in places without easy access to bank branches. It's a big part of financial inclusion efforts driven by state governments.
So they're building deep relationships there, too, on the business-to-government side.
Definitely. And underpinning all of this, both Visa and digital, is technology. The sources really stress this.
How so?
Their edge in winning these huge government contracts isn't just about manpower. It's about using advanced tech. We're talking AI for verification, sophisticated biometrics, OCR for document scanning, natural language processing.
So they're not just running service desks, they're providing integrated tech solutions.
Exactly. That's how they handle the sheer volume and complexity efficiently. Probably much better than the governments could manage internally.
That makes a lot of sense. The scale demands that kind of efficiency and security.
Okay, stepping back for the bigger picture.
Yeah.
Why is this whole government to citizen, or G2C, outsourcing market growing so fast anyway? Well, it's really about specialization, isn't it? Governments are realizing, frankly, that running efficient, modern, customer-friendly service operations isn't really their core strength.
So they're happy to outsource the hassle and presumably save costs.
Precisely. And the market data backs this up strongly. The global visa outsourcing market, that's excluding the U.S., is expected to grow at something like a 14% compound annual rate through 2029.
14% CAGR, that's solid.
It is. But then look at the consular services market, passports, attestations, things like that. That's forecast to grow even faster. We're talking a 32% CAGR over the same period.
Wow, 32%. Why so much faster?
Governments are really feeling the pressure to improve services for their citizens living abroad, their diaspora, and they need to cut their own operational costs. Outsourcing is the obvious answer. BLS is right in the sweet spot of that demand.
So they're riding this huge macro wave. But they also have those unique structural advantages we touched on earlier. Let's just revisit those quickly because they seem key.
Definitely key.
First, the long-term contracts. These aren't year-to-year deals.
No, typically 5 to 10 years.
Yeah.
Exclusive contracts. That gives them incredible revenue visibility, makes planning much easier.
Okay. And second, that negative working capital thing again.
Yeah, being self-funding, getting paid instantly by the applicant, not waiting on government payments, zero receivables headache.
Cash flow positive from day one on any new contract, essentially.
Pretty much. And then the third piece is being asset light.
Right. All those centers in 70 countries are leased, not earned.
Exactly. They avoid tying up huge amounts of capital in real estate. It keeps them flexible and boosts their returns on capital.
That combination, instant cash flow, minimal fixed assets, that explains that super high asset turnover ratio they mentioned, around 9.7x in FY25.
Yep, they squeeze a lot of revenue out of the capital they deploy. Extremely efficient model.
Okay. So we've painted this picture. Operationally excellent, fast-growing, cash-rich business, great structural advantages, riding industry tailwinds.
That's pretty good, right?
It sounds amazing. But despite these fantastic Q2 results and the long-term contracts, the stock price, as we hinted, tells a different story. A story of doubt, maybe. Let's look at the technical analysis. What are the charts saying?
Yeah, the charts as of mid-November 2025, they definitely suggest the market is still quite skeptical. The long-term trend, it's been stuck in this bearish to sideways mode.
Meaning the price keeps bumping its head.
Pretty much. It's been consistently trading below key moving averages, the 50-day and the 200-day. That's often a sign that sellers are still in control whenever the price tries to rally.
And where is it trading right now?
It's consolidating near its recent lows. The analysis points to the 300 to 320 zone as being really critical support level, like a floor for the price for now.
Okay, support at 300, 320. Where's the resistance, the ceiling?
That seems pretty well defined too, between 350 and 365. That area lines up with those moving averages, acting as a strong barrier overhead, so it's kind of trapped in that range.
Right. Stuck between, say, 320 and 350-ish. What about momentum? Are indicators suggesting a breakout or breakdown is imminent?
Well, momentum indicators, like the RSI, the Relative Strength Index, they're actually quite neutral right now, sitting around the 50 level.
So no immediate push either way from buyers or sellers, just balanced.
Balanced, yeah. But here's a potentially interesting technical detail. There's been a noticeable volume uptick recently, right as the price has been forming this base near that 300 support.
Okay. What might that signify?
It could be a subtle sign of accumulation, suggesting that maybe some larger, perhaps more informed investors are starting to buy shares quietly down at these lower levels, absorbing the selling pressure. It's not conclusive, but it's something technicians watch for.
A hint of smart money moving in, perhaps.
Possibly. But for a real confirmation, for this bearish trend to actually reverse, you need to see a decisive breakout. The stock needs to push above that 350 364 resistance level, and importantly, do it on strong volume.
Right. Volume confirms the move.
Exactly. That would signal a real shift in market psychology. On the flip side, if it breaks below that 300 support, well, that opens the door to further declines.
Okay, so what does this all mean? We've got this really fascinating split, haven't we?
Absolutely, a real duality.
On one hand, the operational reality. Huge Q2 growth, that massive multi-crore UI contract, margins expanding massively because of smart operational shifts, over 1,300 crores in cash. Structurally, it looks brilliant.
Fundamentally strong, you'd say.
Yeah. But then you look at the chart and you see this long period of, well, going nowhere or down, skepticism, technical resistance holding firm. Why is the market seemingly ignoring these strong fundamentals?
Well, this raises an important question, doesn't it? The company's whole future growth story depends on continuing to win big. They're planning to bid aggressively on new government tenders.
How big is that opportunity pipeline?
The sources mentioned somewhere between $1 and $2 billion worth of contracts are up for renewal in this GTC space over the next couple of years, a huge prize pool. So given the high growth expected in this outsourcing market, and given BLS's proven operational strength, their strong finances, that massive cash generation, the question really becomes, how long can this gap persist? This gap between the proven operational excellence and this kind of sideways, skeptical, technical trading phase. And what's it going to take to resolve that tension? Will it be landing another major contract, maybe entering a big new market, or will it simply be that technical breakout above 365 finally convincing the market?
That is definitely the core question for anyone watching this space. Something for you to think about. Thanks for joining us for this deep dive into BLS International.
Fascinating company to watch.
Indeed. We'll catch you next time on The Deep Dive.